Good morning, good morning, good morning, good morning, good morning, good morning, everybody. Super excited to be here with you this morning. Sorry, I'm a little bit under the weather in case you couldn't tell with my voice. It's even more nasally than it usually is, so I apologize. This will be a tough listen. But I am all doped up with whatever just to make sure that I can make it through the show. Won't go the full hour and a half today. That's expecting a little bit much. But wanted to make sure I get to spend time with you guys here this morning on our Sundays. What I wanted to talk about today was think or no. So it continues to scramble the brain when I talk to real estate investors that that they're like, hey, look, I found this amazing deal. Okay, let me hear it. And they're just like, well, look how cheap it is. Wrong answer right away. Wrong answer. It's how everything puts together. And you will find moments of ill lucidity today. I have been on a significant amount of cold medication for the last 3 days. So yeah, we're just going to try and piece this together. So any patience and grace you have for this morning, I appreciate it. But I didn't want to miss our time together this morning. So I'm, so being in bed and being sick and kind of in and out of sleeping and, looking at some of the message that I get on my phone. And so I had someone text me yesterday and, or 2 days ago, and they said, oh, hey, what do you think about, they said, yeah, I'm not finding anything. I said, I get it. Yeah, tough market, where if you're relying only on the MLS, obviously it's that much fewer number of deals. Like we talk about in my course, the idea of increasing your network, expanding your horizons, and a lot of the things that we teach in my course, the Lumberjack Landlord, oh shit, I'm a landlord, now what, is understanding that if you're only looking at MLS, your deal flow is dependent solely on what people are going to bring to the market. Now, is that a tried and true way of being able to build your business? Absolutely. My buddy Dion, he's only done deals out of the MLS. So you can absolutely do it. However, his growth trajectory and what he wanted to accomplish was at a slow and measured pace. Check the box. It did it, slow and measured pace. If you have a fire under your ass and you're like, I got to go a little bit faster, because I'm starting further behind than Dion, or I want to grow faster than Millennial Mike because he's a machine right now, crushing it. One of the things that you look at is, how do I find deals in other places? So how do I buy tax liens? How do I buy from cities? How do I buy from auction sites? How do I buy foreclosures? How do I buy short sales? How do I buy wholesale deals? How do I get off-market deals? How do I get seller financing deals? Right? All of these different types of ways that I buy. I've bought all of those ways, and a couple that I'm sure I haven't mentioned. I've bought stuff out of default, that was pre-foreclosure, but bought it right from a bank. There's all these thousands of different ways to buy. I listed just about a dozen there or thereabouts. Again, cold medicine affecting the numbers. But as you look at it, if you're only buying through MLS, that's fine. It's a slow, measured pace. If you want to start creating more opportunity for yourself, you branch out, you start finding these different areas. That's what we talk a lot about in our course, is finding those different areas and how to buy from those different areas, how to create those opportunities. But I go down that path to say, this person reached out to me and said, yeah, I'm having trouble finding anything, blah, blah, blah. I'm willing to jump on anything. Wrong answer. Don't be willing to jump on anything. We only want to look at great opportunities. Now, you guys know I'm a value add investor. I don't buy clean, clear-cut deals. Why? Because anybody can do that. Anybody can. I want to use my skill and my expertise to create great deals every single time. And so when I talk about think or no, when you get really good at this, and that's the goal, right? The skill is to get really, really good at this. And then instead of thinking you know something, you know something. Now, the first time you're out of the gate, You can have studied all you can study, you can have read all that you've read, and you still think that you know at that point. But after you start seeing the practice of it, right, you get that confidence because now you know that you know, because you took action on what you thought you knew, and it turns out you knew and you were right. So this is where we have so much trouble, myself and the real estate Avengers. This is where we have so much trouble with the Crash Bros, is they act like they know, but they only think that they know because they actually haven't done it before. They don't know what they're talking about. They don't know. Hence why they started calling for rents crashing 2 years ago. And bad news, I just broke a record in my market. Sorry to break your figures and your thought process and your feelings. Factually, I just broke a record in my market for rents. Now, in the wintertime in our areas, rents slow down. So what do we see? We see that there's a little bit more inventory. There's a little bit fewer people looking, but that's expected. If you were brand new to the market, you would think the market is shifting. Not shifting. I know that when it comes to September, there's fewer renters. When it comes to October, you cut that number in half. When it comes to November, you cut that number in half again. And when it comes to December, you cut that number in half again. And so when it's all said and done, you've just taken 100, you halved it once to 50, you halved it against to 25, you halved it against to 12 and a half, and then you half it again to about 6.5 out of 100. It gets really low in November and December because the only people looking then are people that have to look. They're people that are getting evicted, or they're people that had some major life event where they have to move. That's what really happens in those months. No one in New Hampshire says, I'd love to move in November around Thanksgiving, December around Christmas and New Year's and Hanukkah, hey, you know what? January is the coldest and snowiest month of the year. Let's move then, when we always have that one cold snap that lasts 0 degrees for a week and sometimes sub below. Again, these are things that when you start to see this and you have years in the business, you then know what you know instead of think that you know. So one of the things that we always try and introduce in my course is all of my experience over a 20-year period, 22 to be exact, but over a 22-year period, I share all of that because I want to give you my version and my work over the last 22 years, all the mistakes that I made, all the things that I did, all the changes that I took care of and built into my business. That's where I want to spend that time with you guys and say, this is what I did. However, yesterday's lesson doesn't always win tomorrow's ball game because that's what shifts. So it's really important that as you're going through your real estate investment journey, whether you have 0 units or 20 units or 50 or 100 or 200, any stage in the process that you're at, you really need to be operating under the things that you think, and then in spending more time and investment into going from think to know. I know as much as the sun is going to rise tomorrow, that real estate is a good long-term investment. History has never proven that wrong. Where it does prove it wrong is over periods of time. So when you're trying to time the market, it's really very difficult. Somebody said in a reel that I sent to my guys, something said to these guys, I sent it to Dion and to Mike, Millennial Mike. And it was somebody said, oh yeah, real estate's really predictable. Oh yeah, to show me. Is it going to go up and down? That's predictable. Show me the cycles. The cycles are in and out. They can be 4 years. They can be 12 years. They can be minor corrections. They can be massive recessions. They can be near global collapse, right? There's the gap in between, and severity is always what then dictates whether or not what you're doing in that process is going to turn out to be a good strategy. So what I would always tell you is, obviously, it's the think or the know. I think that real estate remains a good investment. I know that if you buy a deal now that has good returns, that I know that if you bought it and it has good returns now, then as interest rates change, whether higher or lower, it does not impact you because you have 30-year fixed rate debt. So that's what I know. I know that that payment stays the same. I know that rents Rents in my area always are a little bit softer in the wintertime, and then they explode in the springtime. In the last 2-3 years, most people thought that consistently it was up, 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 and up. It's not that way. We know that when we have a unit come due or come open in October or November, we know that we're going to take the amount that we got for rent the last time is likely where we're going to be stuck at. So everything we have expire in May, June, July, August, and sometimes September. September is usually a push. I don't love September expirations, but that's where we spend our time. So one of the things is you're evaluating yourself, going through the journey. I know that there's frustrating times right now, trying to find deals. One of the things is don't necessarily change markets, change asset classes. That's one of the areas that I always encourage people to look at. Don't only look at single family. I don't even like single family. Single family works in a lot of markets. It doesn't work in any of mine. 0 out of all. None of my markets does single family work. So I looked at all the different assets. Now the big commercial assets, right? Oh, I saw one this week that if I put $300,000 down on it and had a $10,000 a month mortgage on it, I was going to make 3% of my money. That is a horrible return. I don't want to own that asset. I would rather stick that money in a bank and make 5.5%. But frankly, I just wouldn't buy that asset. I can find another asset that I can make 15% on. So when we look at it, when we go from I think to I know is really where you're going to find your biggest jump in wealth. That's where you're going to find your biggest jump. So you guys that are on your wealth building journey, I'm going to steal that from you, Chester. For those of you who are on your wealth building journey, recognize that Chester's got it right. It's a journey. It's wealth building. It's wealth building. I actually had to say to somebody yesterday, my exact words were, you are real estate guessing, not real estate investing. Heard it here first. You are real estate guessing. You are not real estate investing. Invest, be investors. That includes investing time in your markets. It's investing money and time and experience in yourselves, gaining experience, surrounding yourself by the right people, learning from the right people, creating community, better understanding your markets, better understanding how to evaluate assets, better understanding how to get into more profitable assets. Why do you think builders build? Because they know that game better than any other and they make money doing it. Why do you think rehabbers rehab? Because they know that game better than any other and that's how they make money. So the best returns I ever see are almost always on new construction if you're big enough, right? If you're a smaller business guy like me, the best money that I ever make is buying value add properties, buying stuff that if you buy if you buy a C in a C area, well, I got to break it down to an F so I can build it back to a B plus or an A minus, right? If I'm buying something that is a C in a B area, well, then I might want to lipstick it and bring it up to a B, but there might not be that return if I take it from a B or from a C to an A based on where the area is, right? So these are all the evaluation processes we put the students through in their boot camps, talking about finding value. So what I would encourage you guys today to really focus on is taking your I thinks to I know. And the way that you do that is really by only 3 things. One is continue to skill up, learn, listen, follow, look at other landlords that are doing things that you want to be doing, like Millennial Mike with remote investing, like Dion with the lazy man strategy. Look at the way that they're doing it. I think that there's something that can be learned from all of us. That's why I love working with these guys, and Zoom from One Rental at a Time, is because we're all a little bit different, but we accomplish the same task. The cool thing is we all got rich doing real estate. That's the key. I need to see who this is because we have people in the field. So there's a lot of fun stuff in this journey, but wealth building journey nails it. It really is a journey. It is about creating wealth, and it really is understanding how to go from think to know. The other steps in going from think to know is 40% of people use property managers. I hate property managers because I've yet to find a good one. I think I might have found a good one. She's not in my market, but I think I might have found a good one. I like what she has to say. We'll see if she can build it out. And you know who I'm talking about, Jessica. So we'll see if she can build it out. But I like her concepts. I like her ideas. And we'll see how that goes. But I think that really the key is going from think to know. I think that's a good deal to I know that's a good deal. I think that project is too expensive to I know that project is too expensive. Getting yourself from think to know is going to be how you create wealth. It really is. And all of that process from think to know is a combination of skilling up, experience, and being around other people that know. I'm a 22-year veteran in this. I still call other investors. I do. I want to see how their stuff's going. I want to see what they're encountering. I talked to one of my buddies who's a complete and total show off. I won't share his name here just because I don't want to out him. The guy's a rock star. Actually, I'm going to say his first name, Josh. Josh is a rock star. Josh he deals in alchemy. He truly turns crap into gold. And we have a lot of similarities, and he is just a force to be reckoned with. But I love the dude, and he's built stuff from nothing, right? And I think the key is that he went from I think to I know. He went from doing residential sheetrock jobs to now he's building top 3 hotel chains. He's building hotels for them. He went from think to know. And that journey, guys, it didn't take 20 years. It didn't. It took 3. So what did he do? He changed when he went through the process of I think, to now he knows. And that, again, it comes from skilling up. It comes from surrounding yourself by the right people and having active conversation with them and continuing to do the work on a daily basis. That's where I think all of those things come into play. So with that being said, like I said, that's how you get elite, is you go from think to know. When other people are real estate guessing, I'm real estate investing. And that's what I hope you guys are here to do today.